If you want to find genuinely good property deals, listen carefully, because most investors are looking in exactly the wrong places. Last year alone, we sourced over £100 million worth of property for our clients. And the biggest lesson we learned is that the best deals aren't where everyone else is looking. The difference between a good and bad deal could be tens of thousands of pounds, money you'll either make or lose, depending on how well you understand the game. So in this video, I'll show you exactly how we source the best deals, the most common pitfalls you need to avoid, and some surprisingly simple techniques you can start using right away. And before we dive into the full list, let me show you one of the key ways we source deals, something we do every week for our clients. We work directly with developers. We help them to move multiple units quickly and privately, without them ever appearing online. This works especially well for developers looking to kickstart off-plan sales, clear remaining stock at the end of a project, or boost their numbers just before their financial year ends. And because we have these relationships and we buy in bulk, we regularly secure discounts of 7 to 12% below market value. Now, realistically, this particular method is best suited for professionals like us who have the experience, infrastructure, and access required. But don't worry, this isn't the only way to find deals. In fact, there's a whole hierarchy of methods you can use to find genuinely good property deals. And that's exactly what I'll cover next. I'm going to walk you through 8 proven ways to find a good deal, ranking them from hardest to easiest, so you can pick exactly what's right for you. And just before we get into the breakdown, if you want to shortcut your learning curve and find better deals faster, we've made our full suite of investing tools completely free to access. You'll get everything we use day to day to source over £100 million worth in property every year. Just check the link in the description and start using them today. When you're looking for a new job, you've got a few options. You could head over to one of the big recruitment sites and fire off your CV to a handful of companies. But even if you apply within hours of the job being listed, there's a risk you'll be up against hundreds of applicants. Meanwhile, the hiring manager is overwhelmed, picky, and looking for any excuse to rule people out. Now let's imagine that instead you reach out to companies directly before they list a job. If you time it right, you might catch a hiring manager's attention just as they're thinking of expanding the team. Suddenly, instead of being one of 300 applicants, you're the only one. Okay, so I know this might not work for big companies with their own internal team of recruiters, but you get the idea. And you can use the same strategy for investing in property. While other investors are trawling Rightmove, chasing the same properties and competing on price, you can often beat the rush and snap up a great deal by cutting out the middleman and going direct to the vendor. It's all about targeting people who aren't thinking about selling until your message lands at just the right moment. I won't pretend this strategy is easy. It's far from it, but it can be one of the most profitable ones on this list. So how do you do it? Well, first, you want to choose a focused micro area. The smaller and more specific, the better, because this strategy requires serious focus. You can send letters, run targeted online ads, or even place notices in local papers. But the most important thing is that you're patient, because this isn't a quick win strategy. There's an old rule of marketing that people need to see the same message 5 times before it even registers with them. And in this case, it's even more true, because timing is everything. The same letter might go straight in the bin one month, but earn you a call the next when their circumstances have just changed. It could easily take 3 to 6 months of constant effort to get your hands on the right deal. So track every lead and follow up consistently. Because the most profitable strategies aren't always the fastest, but once you get results, you'll wish you started sooner. And the same can be said for this next trick, which reminds me of a property I picked up years ago that had been sitting untouched at auction. So many investors had walked away from it, convinced that it had subsidence and assuming that the repair costs would wipe out any potential profit. But when I brought my builder friend along to the viewing, he spotted something different. The issue wasn't with the foundations, it was with the drains, which is a far easier and cheaper fix. So while everyone else swerved it, I made an offer after the auction and picked it up for less than the reserve price. That's the thing about auctions. Most people see them as a way to snap up a bargain, but in reality, every single lot has a problem. You just have to figure out what it is and how much you're willing to pay. And it's not just about what happens on auction day. In fact, some of the best opportunities come afterwards. If a property doesn't sell, the vendor might be on a deadline or under pressure. That opens the door for lower offers and fast decisions, as long as you've done your homework. So if you're going to use auctions to find good deals, here's what we recommend. Always read the legal pack. It'll tell you far more than the listing ever will. Take a builder with you to the viewing. You need to be able to tell the difference between cosmetic damage and more serious and expensive issues. Set a hard ceiling price and don't budge no matter what happens in the room. And if a certain lot doesn't sell, call the auctioneer the next day. Ask what's still available and what the vendor might accept. That way, while everyone else is caught up in a stressful bidding war, you can quietly get your hands on something far better for far less. This brings us nicely onto the next strategy, and it just so happens to be one of the main ways we find deals for our clients. I need to tell you about a client who tried to negotiate directly with a developer. She'd done her research and asked all the right questions, only to be told that the price was fixed and there was no room for negotiation. So she just moved on, assuming that that's how developers work. But a few weeks later, we bought a similar unit in the same development. Not only did we snap it up for a lower price, we bagged some extras too. We managed to get a completely different outcome for two reasons. We approached them at a better time, and we understood what they were trying to achieve. You might assume that developers don't offer deals because in a competitive market, why would they need to? But like any business, they have targets to hit. And if you help them to hit those targets, they might be more flexible than you expect. As a sourcing company, we obviously have an advantage. We buy in volume, we've made connections, and we know how the game works. But even as an individual, it's not impossible. If you time it right, you might be able to unlock extras or even a discount. So here's what you need to do. Visit the sales office either at the start of a project when the developer's keen to make early sales, or towards the end when they're trying to wrap things up. Try to learn their financial calendar. Year end and half year are the key moments. And don't be shy about asking, is there any flexibility if I'm ready to move quickly? You normally won't get a yes, but you'll quickly learn whether there's a deal to be had. And even if they won't budge on the price, you might manage to get some extras included that would normally cost you more. If not, no harm done. You can either repeat the process with another developer or move on to this next trick. So a few years ago, a letting agent gave me a quiet heads up. They were managing a rental flat for a landlord who was thinking about selling, but hadn't got around to listing the property yet. They didn't want the hassle of evicting their tenant, and they didn't have time to arrange endless viewings around the tenant's schedule. They just wanted a clean, quick exit. So I made an offer there and then, offering to buy the property with the tenant in situ. It was a true win-win. And what might surprise you is that this kind of opportunity is more common than you might think. Right now, thousands of landlords are quietly exiting the market. Whether it's because they're fed up with rules, regulations, and red tape, they can't meet EPC targets, or they've just had enough. But what you've got to remember is that when these properties appear on Rightmove, they're already in front of every other investor too. So if you want the best deals, you need to get there first. And to do that, you need to build relationships with letting agents, network with other landlords, and build a reputation as someone who's able to move quickly and buy tenanted. For a landlord who's ready to move on, that's a big deal. You save them time, money, and hassle, and in return, they'll usually accept a lower price. But as I'm about to explain, sometimes you need to do a bit more work to get a great deal, especially if you buy a property that hasn't been built yet. Because we get messages all the time from podcast listeners or readers of our newspaper column with problems like, I put down a deposit and 2 years later, the site is still a pile of mud. Or the developer's gone bust and my solicitor says the money's gone. There are off-plan horror stories everywhere. But when we dig into the details, there's usually a clear pattern. Corners were cut, checks weren't done, and there were red flags waving from the start. They just didn't know what to look for. Buying off plan can be risky, but if you follow a few simple rules, it can be one of the cleanest, most effective ways to generate equity from day one. So here's what we tell our clients. Stick to established developers with a strong track record. Make sure your deposit is held in escrow or backed by insurance. And ignore brochure valuations because they're often inflated. Instead, find out what similar properties have sold for nearby. Off-plan isn't for everyone, but if you lock in a good price, protect your deposit, and work with a developer who knows what they're doing, it's one of the few ways to make money before you even get the keys. And if you want a full breakdown of what to check and what to avoid, we've made a separate video covering everything you need to know. Let's talk about a hypothetical investor we'll call Connor, who spots a flat that's been sitting on Rightmove for over 6 months. The photos are terrible. The description is a single line that says nothing. And it's been listed for rent and sale at the same time. Normally a sign of a desperate owner who needs to do something with it, but isn't sure what. But when he looks closer, the fundamentals are solid. It's in a good location with strong rental demand. And despite the confusing listing, the sellers are desperate to make a sale. Connor manages to secure it at a steep discount, simply because no one else has taken the time to dig deeper. That's the thing about portals like Rightmove, Zoopla, and On the Market. Most investors treat them like a highlights reel. They look for polished listings with glossy photos and clever staging and write off everything else. But the best deals aren't necessarily the obvious ones. The real opportunities are often in the awkward, unloved, or overlooked listings. The one where the seller has got frustrated with the process and the agent just wants it gone. So, how do you find those? Set up alerts so you're the first to hear about relisted or reduced price properties. Use Property Log, which is a free browser extension, to track listing history and price drops. Search for signs of distress or laziness. No interior photos, vague descriptions, properties listed for both rent and sale. Keep your filters broad because you do get things like flats randomly listed as barn conversions by mistake, so many people with tighter filters will miss them completely. And don't just stick to one portal. Check Rightmove, Zoopla, and On the Market because some agents only list on one or two. If you're patient and you know what to look for, this can be one of the most consistent ways to find motivated sellers. A friend of mine recently bought a house for £15,000 under the asking price, despite having very little negotiating experience. There was nothing wrong with the property or the listing. They were able to snag such a great discount for one simple reason. The previous buyer had just pulled out and the seller was in a rush to move on. They didn't want the highest bidder. They wanted the least stressful path to completion. My friend had their broker lined up, solicitor ready, proof of funds in hand, and that was enough. The agent said yes within hours. And this happens more than you'd think. Roughly 1 in 3 sales fall through after an offer has been accepted. Chains collapse, buyers get cold feet, mortgage offers are dropped at the last minute. So when a seller relists their property, they're not just looking for the best offer. They're looking for someone who won't mess them around. And if that's you, and you can prove it, you're already ahead of 80% of the market. So here's how to give yourself that edge. Have your broker, solicitor, and proof of funds ready before you even make an offer. Move quickly and communicate clearly with the agent. And if your first offer is rejected, follow up later. The seller might have a better offer now, but if it falls through at a later date, they may reconsider your offer. Being organized might sound like basic advice, but when so many others are slow or flaky, you stand out. And sometimes that's all it takes to turn a decent deal into a great one. But what if you don't have the time or confidence to go it alone? Or you've tried everything we've talked about so far and still don't feel like you're getting anywhere? That is when some investors turn to the professionals. But even that comes with a few traps to avoid. For example, there's a myth that every property sourcing company has a little black book overflowing with deals you can't find anywhere else. It's easy to assume, at least from the outside, that they've built countless relationships, have insider access, and are handing out golden tickets for a small finder's fee. Unfortunately, that's rarely the case. We've lost count of the number of deals we've seen from so-called sources that are just Rightmove listings with a fee slapped on top and some very optimistic deal analysis to go with it. I'm not saying these people automatically have bad intentions. The problem is that sourcing is often sold as a low-cost way to get started in property. So the industry ends up full of people who are still learning as they go. But the best ones do have genuine access to good stock. They're out there building relationships, keeping tabs on local landlords, and getting early access to motivated sellers. They know how to spot value, how to negotiate, and how to structure a deal that actually works. But finding those people and knowing when to trust them takes effort. So if you're thinking about using a sourcer, here's what we recommend. Don't see it as a way to avoid doing the work. Instead, think of it as shifting your focus from deal finding to deal vetting. The sourcer will present you with the deals, but it's ultimately your responsibility to figure out whether it's right for you or not. Check their assumptions. Compare their numbers to local sold prices, rental data, and your own mortgage terms. And ask questions. A good sourcer will be able to justify their numbers and explain anything you might be unsure of about the deal. This is the last strategy on our list because it's objectively the easiest. But if you treat it like a shortcut, that's when mistakes happen. And if you don't want to gamble on a random sourcing company or spend months learning all of this stuff from scratch, you could always book a free strategy call with our team. We'll show you what's working in today's market and help you figure out what approach actually suits your goals. Just click the link in the description to book. So now you've got the full playbook, but finding a deal is only half the story. Because even a discounted property can turn into a bad investment if it's the wrong kind of property. So if you want to know what to avoid and what's actually worth buying this year, check out this video next, where I break down the best and worst properties to buy in 2025.